Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A bullish closing white Mariboso and fourth bullish white soldier yesterday. There was also a continuation of the move higher up and away from the lower bull channel line, currently at 106.58, which is highlighted in bright red on my daily chart. Yes, I also saw a move up through the flatlining short medium moving average, currently 108.81, all the way up to the 50% Fibonacci line, the January 2021 to September 2022 move at 109.44, where it was capped. The base of the action, unsurprisingly, was the flatlining medium moving average, currently at 108.05. The 50% Fibonacci line at 109.44 is actually the gateway to some mild congestion formed between mid-April to mid-May, between approximately 109.50 to 110.50. Beyond that, we have the interesting, influential, and also highlighted in dark blue neckline of the July 2017 to November 2018 move, currently at 110.91. This neckline capped the late April and May highs and allowed the construction of the mid-March to date bull channel in the first place. Now, so far today, either side of the 50% Fibonacci line, but a small range so far. Cable, aka sterling against the US dollar. A bullish closing white Mariboso and third bullish white soldier yesterday. This is a continuation high from the immediate countering bullish engulfing pattern seen a few days ago. However, it did make new highs not seen since April 2022. Yesterday, market also broke up through and closed over the September 2020 low at 126.72 and the interesting 50% Fibonacci line of the June 2016 to September 22 move at 126.99. These pair of resistances have capped the market back in early to mid-May, so it was a significant development. Prices indeed peaked just over the lesser Fibonacci line at 127.72, but I suspect this was a convenient point to finish up for the day, as just above is the upper bull channel line, currently at 128.39 of the early April to date bull channel. What is interesting about this upper trend line is that early next week it intersects with the November 2020 low at 128.52, and then the week after it intersects with the more powerful looking July 2021 to date optimized downtrend, which you can see angling down in dark blue on my daily chart, and it's currently at 129.12. Thus, if there is to be an attempt higher, then sooner would seem better than later, and later still better than just later. And so far today, a small attempt higher, but the market stuttered upon approach to the upper bull channel line, and prices have pulled back towards the open right now. Euro sterling. A bullish engulfing pattern yesterday, which wasn't that hard to make, as the previous session was an indecisive doji cross. However, whilst it could be seen as a bullish engulfing pattern, it was also an indecisive spinning top, which together just highlights the confusion the market has been having as it sits on the November 22 support at 85.45. Whether to go lower or retreat back up, and in the end trying to do all these things at the same time and getting nowhere really. So far today, a slightly higher open, but then a dip towards the support 85.45, but not managing to get there just yet. US dollar against the Indian rupee. An inverted hammer pattern yesterday, which was counterintuitive as it was also a second consecutive close below the rising long moving average, currently at 82.06. I suspect the reason we did not see prices try much lower was because we have an early May piece of closing base congestion, approximately between 81.65 to 81.80. Overall, this continues to be a pullback from testing the overhead broken upper time, currently at 82.53 of the October 2022 to January 2023 mildly bearish shift pitch, highlighted in green on dark green on my daily chart. Between where we are and the upper time, we also have the slow declining short medium moving average, currently 82.17, and a slowly rising medium moving average, currently 82.27. They're now separating away. The main recent feature remains the bow tie formation of the short moving average, currently 82.41, the short medium moving average, and the medium moving average. This triple crossover pattern set up the opportunity for a move higher as the moving averages went in and out in the right order of the bow tie and are mainly pointing higher. The theory indicates that between 20 to 25 sessions after the crossover, we may see a move in the direction of the bow tie as a result. Thus, between the 20th to 27th of June, look out for such a potential move. We also have, though I am perplexed by its lack of influence here, the ascending triangle formed between January to March, highlighted in dark blue on my daily chart. The market continues to have difficulties in interpreting this pattern. And so far today, a small dip lower towards the 81.80 zone, but only managing to approach it and not even test it before pulling back up and looking like an indecisive doji cross right now. US dollar against the Brazilian real. An indecisive doji cross yesterday. It was almost like the market suddenly discovering what it had done by breaking and closing below the lower bear channel line, currently at 482.26, which is highlighted in bright red, and realizing that this was important, but then not having the energy or the will to do something else. We nevertheless are still in between the middle time above, currently at 486.74, and the lower time below, currently 463.73, of the broken late July to late September 2022 bearish shift pitchfork. This pitchfork is highlighted in dark blue on my daily chart. Now, this pitchfork is important as it showed the bearish angle of attack way before the bear channel was created. Below, we now have the 50% Fibonacci line of the October 2018 to May 2020 move at 477.54, a Lissa Fibonacci line at 472.92, and the May 2022 low at 468.98. Even now, after all this time, still sitting over all of this is still the shadow of the monthly key reversal down we saw in January. US dollar against the Mexican peso. A gravestone doji yesterday, right on a mess of supports, which makes me question such a pattern in the first place. You see, just below we have a band of support between approximately 1703.90 and 1709.23, which has as its constituents the March 2016 low at 1709.23 and the April 2016 low at 1703.89, plus the middle time, currently 1706.81, of the newly drawn December 22 to March 23 bearish Andrews pitchfork, which is highlighted in bright red on my daily chart. Now, this middle time supplements at a sharper bearish angle of attack the existing September 2022 to date lower bear channel line, currently at 1719.28. However, the lower bear channel line is currently breached, though not as yet broken. We are indeed just ever so slightly below it, and it seems to be acting as a cap on the market right now, squashing it down on the congestion below. Now, this situation obviously cannot continue, so something will have to give, and I suspect it may be as soon as early next week. Now, so far today, well, a reactionary pullback up, but again capped by that breached lower bear channel line that's overhead.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.